Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Tuesday, January 9th, 2006, and the S&P 500, which we have on the screen right now, represented by the SPY, did close with a slight loss here, although the market was pretty mixed. Nasdaq was higher, S&P was a little bit lower, and the mid-caps actually had a pretty decent little gain, actually about matching the gain of the Nasdaq 100. With about a 0.5% move higher. No doubt fueled in part by Apple Computer. We'll take a look at that in a moment. But the S&P 500 continues to find support down near this prior resistance, near the 140.75 level, as well as that location of the rising 50-day moving average. When we look at a shorter-term time frame, like the 30-minute chart, you see that I thought yesterday the market might need to consolidate the gains a little bit further because they were at that declining 5-day moving average. It did, in fact, get rejected at the declining 5-day moving average, but was able to make a higher high. So that's one good positive indication that maybe the buyers are starting to take back control in here a little bit. And this, I just switched to the 10-minute time frame. You can see that again, late in the day, that 5-day moving average was tested once again. Now, the shorter-term moving averages in here are all starting to crisscross and show that the market has now reached, I think, a short-term level of support for certain. And now looking below that 140.50 level would put that in jeopardy. Resistance at about 140.150. I think getting above there tomorrow would definitely put the buyers back in control, and it might be worth a trade to the upside in the S&P. And perhaps we could see it run up back towards the top end of this range near 142.75. And I think that that's a pretty reasonable scenario because we have been testing this 50-day moving average, and the 10 and 20-day moving average, which are declining, would a lot of times bring a lot more sellers to the market or just create more caution in here. And I'm going to continue to say that that's what we need to do, is have a lot of caution in this market. That doesn't make sense, have a lot of caution, but be very cautious in this market with those 10 and 20-day moving averages declining. However, the bigger picture is we've got a rising 50-day moving average, so the market remains innocent till proven guilty. And what would make it guilty? Probably breaking below 140 and closing below there for a few days. The Nasdaq 100, let's take a look there. This market continues to add to its little recovery gains in here, and back again. This 43.30 level was an important one that we were watching as far as support late last year, and then it did become a little bit of resistance. Now it continues to act as support for this market, and again, nothing has changed here. Although the market had a good, strong day, nothing's changed. It's back in the middle of this range that's defined by resistance up near about $45 a share and support now at about 43.5. So we're right near the middle end of that range. And looking at a 10-minute time frame, as I indicated yesterday, this market is a little bit more bullish looking to me because we've got this rising 5-day moving average. It looked like we might get a bigger shakeout in here this morning, but that rising 5-day moving average, as it often does, did act as support here. So again, we're going to just continue to be cautious, but I think for now, important support probably down near this 43.60 level. I think breaking below that might bring about some further selling. But looking at this half-hour chart, it's just kind of chopping higher. There doesn't really seem to be a lot of conviction from the buyers. There seems to be a lot of supply available in here. Otherwise, the market would be running up a lot more quickly than it is. So again, we need to remain very defensive in this environment. The mid-caps, symbol MDY, let me get those typed in here. Mid-caps did, like I said yesterday, come down to an important level of support. This prior resistance in here has acted as a support on a couple occasions, and now it's starting to bounce a little bit. It's closed today for the third time underneath the 50-day moving average. That gets a lot of people's attention. A lot of times gets people short, and those shorts I think are early because we've still got that rising 50-day moving average, and they could become the the fuel for some upside, maybe up towards that 148 level, which would put this market back into the middle of its little range that I think we could say it's now in, between maybe 146 and 150. So the mid caps, nothing's changed there. This 10-minute time frame is showing that the 5-day moving average might be starting to flatten out a little bit. I'd like to see a pullback maybe down towards 146 tomorrow, and then see it come take this 146.50 out. If that were to happen, I think we could make a pretty quick run for the 148 level. Let's take a look at the SMH just for the heck of it. In the middle of a range, getting a little bit healthier here. It does have some resistance near 34.5 or so. Breaking above that could put this market back up towards the important level that it's seen, which is at about $35 a share. So the semiconductors are overall in a range. Looks like the buyers have taken control over the short-term trend. We've got these higher highs and higher lows. So I would be careful if you're, especially if you're shorting in any of these semiconductor stocks. Let's go ahead and take a look at the stocks we've been in. First of all, AsiaInfo Holdings, symbol ASIA. We got involved in this one at 785 the other day, right in here. And our stop has been at $7.60. Finally, that stop was hit today. The stock couldn't make it higher. So we were out of that one with a loss of 25 cents. GHDX, this is Genomic Health. The stock had a great run early, but not before, not before we were stopped out, unfortunately. We got involved in this one at 1980 yesterday. I suggested a stop at $20.28, which was just a penny off the low of the day, which always sucks to sell near the low of the day. At 20.27 was the low. We got stopped out of that one with a gain though of 47 cents. NightHawk NHWK. Here's a stock that we got involved in yesterday at 26 bucks a share. Or maybe was it yesterday? I think it was yesterday. At $26 a share. I had suggested you raise your stop up to $26.15. Hopefully you were smart enough to take some of these gains. I'm going to say that we got stopped out at $26.15 with just a 15-cent profit. But if you got stopped out at $26.15 after the stock was up close to $27.75, I think you're missing something here. You can't wait for an end-of-the-day instructions when a stock rallies that strong that quickly. So hopefully you should have been out with a bigger gain than what I'm going to indicate we officially got out with. Conexant, CNXT, we were looking to buy this stock above $2.18. That strength never materialized, so there's no reason to get involved in that stock today. ERTS we were looking to buy above 53.05. It gapped up above that level, but as I mentioned clearly yesterday, I only wanted to buy it on strength after a pullback to 52.70. And you can see that 52.70 right here. It kept pulling back, and then it should have been purchased right over in here as the stock showed strength. You don't want to buy it on weakness, and you don't want to buy it on a gap. I made it clear we wanted to wait for weakness and then buy the strength. Now, our stop had been at $52.35. I'm going to say you can raise that slightly. Let's raise it up to $52.40 in shares of Electronic Arts. ISIS, this is the ISIS Pharmaceuticals. We were looking for a move above $11.38. That obviously has not occurred, and we'll probably look at this stock again for tomorrow with even a tighter stop, but no reason to get involved in that one today. And finally, we had one short sale candidate. That was WebEx, symbol WEBX. We were looking for a rally up to 33.90 first. We did get that up to that 5-day moving average and wanted to short it below 33.55. That occurred right here. It showed a little bit of profitability short term, but we officially ended up getting stopped out at 33.95.